You're listening to Ron Siegel's Home and Finance Radio Show, only on Financial News and Talk. Now live in studio, your host, local and national real estate expert and consumer advocate, Ron Siegel.
And hello again. Welcome to Ron Siegel Radio. This is the show with no real boundaries as we discuss current events, financial markets, politics, sports, even poking fun at the rest of the media. This is the show that connects the dots of confusion delivered by conflicting media reports. We connect the dots so you know the actions you can take, how your family or business can benefit from current events. Most of all, thank you for joining me. Within every market, there are solutions as well as tremendous opportunities. You just need some trusted guidance. That is my message, and I will be delivering it every day. We have a very focused show. We only chat about items that affect the roof over your head, your bank account, and anything I feel would benefit you. But before we get into our intriguing content today, please join me in welcoming our featured guest.
Welcome back.
Welcome back, Jeff Sipes, Blue Water Credit. How are you this morning?
Hey, Ron. Thanks for having me. I'm excited to talk and have a little fun along the way.
Glad to have you with us. And then remind you, if you ever have any home or finance-related questions, I am the consumer advocate looking out for you. And you can reach out to me directly, 800-306-1990, 800-306-1990, or ronsiegelradio.com. Just remember, that's the number you call anytime for assistance. When you call that number, it comes directly to me first. There are no operators standing by.
Quiet, numbskulls, I'm broadcasting.
While I do a great team when it comes to developing a financing plan, a plan to save you money, I personally work with you. Even if you don't have any needs today, save this number in your phone for future reference, 800-306-1990, 800-306-1990. And yes, we are celebrating today. We celebrate every day on Ron Siegel Radio. I'm a big believer in celebrating. There's lots in our world. There's a lot of craziness in our world right now. And if there's a way to celebrate, yeah, I'm going to do it. And I will remind you, because if you're looking at me like I'm a little nuts, well, maybe I am. But I know it's Wednesday right now, and this is when we record our broadcast for the weekend. So if you're hearing me talk about the celebrations, well, the big broadcast is Sunday morning. And our celebrations for Sunday, let's see, Clergy Appreciation Day. Yeah, we like that one. And I don't know if this is any correlation between the two, but we've got Clergy Appreciation Day is the same day as World Mental Health Day. Don't know. I'm just throwing that out there. I don't want to get any clergy or anybody upset with me. This one's an expensive one, Jeff. This one might cost you because it does me all the time. It's National Handbag Day, so that can be an expensive one. Angel Food Cake Day goes along with Cake Decorating Day. So I actually am much better at demolishing the cake than I am at decorating the cake, because usually it's just a matter of me getting some of it and enjoying it, eating it. Walk to a Park Day. Yeah, when you got bad knees, we don't walk to a park. So we're not gonna partake in that one. But hey, there's a lot to celebrate today. So that is some of our celebrations of the day. Better outcome segment today. So we've been running this up and chatting about this one a lot, about the better outcomes. And if you missed some of our broadcasts, I actually did actually, this is the problem solvers, not the better outcome. We'll get to that one in a minute. But in problem solvers, I did a broadcast during the week, and if you want to go back and look at it on our YouTube channel, it's Ron Siegel 1 on YouTube. And it was a introductory first-time home buyer program. And you're going to get a much better outcome, and it'll solve a lot of problems. If you listen to that, if you are a first-time home buyer, you go back there and check that out and see what there are. It's a lot. We would give you the highlights. Now, we do a first-time buyer, an in-depth workshop, and we usually do that once a month, and I'll have to get you the dates of that. But go listen to that, because we're going to talk a lot today with Jeff Sipes about the early part of the home buying process. Because one of the things that many people miss in the home buying process is well, you don't know what you don't know, right? So you go out there and you say, you and your parents, significant other, whomever it might be, decide, well, I'm going to go start looking at houses. I want to buy a house. I'm 33 years old, and that's where a lot of people start when they're buying their house. I'm going to go house shopping. And you wait until the very last part of your lease. You know, you've got 2 months left on the lease. You say, I'm going to go house shopping. Wonderful. Well, you've done things a little bit backwards. And I don't blame you for doing it backwards. You don't know any better. Here's the issue, is you want to start off, and we're going to get into depth with this Jeff Sipes in the broadcast today about this. Personally, I use a service called myfico.com, myfico.com. I pay for it just like everybody else. They may have a free version for radio hosts. If they do, I don't know about it. I pay my way. And yes, I do pay them $50 a month because I want to know about my credit and my wife's credit. And I'm a nerd. I look at it every day. They send me this email or text message every single day. And it says, what's changed on my report? If it goes up 1 point, if it goes down 1 point, if it goes up 3 points, if it goes down 5, but whatever. It tells me what happened and why it happened. And that's important to me, because it's the only way that I know as a lay person, just a guy doing a little radio here in the morning, to find out, what's driving my score. When my credit rate, when my my utilization ratio goes up a little bit, is my score going to go up or down? How many points is it going to go up or down? That's how I learned that, other than talking to Jeff Sipes, right? But that's where you want to start. You want to know what your credit score is, because then the next step is to go and get pre-approved or pre-underwritten. Don't go shopping for houses yet. You go and you get the mobile app, the best one in the market. Go to ronismylender.com, ronismylender.com, and you can grab our mobile app. You can use it on your desktop. You can use it on your iPhone. You can use it on your iPad. You can use it on your Android, Surface. Use it wherever you want, in the car, in the bathroom, whatever you want to do. Don't take pictures, right? But grab the app. What is the number one search term in the internet for people that are looking to buy a house? Mortgage calculator. What is the top item on our mobile app? It's a mortgage calculator, right? Because the number that you look at for buying a house, and I don't know where you're at, but if you're in Orange County, California, $836,000 median home price, $836,000, right? If you're in San Bernardino, you're probably, or Riverside, you're looking at $425,000. What county are you, Jeff?
We're in Placer County. So
Placer County. Okay, so I even have the numbers right at my fingertips for Placer County. You're looking at a $506,000 median home price.
What a bargain.
What a bargain, exactly. So now, anybody going to write a check for $506,000 or $400,000 or $800,000? Yeah, I know it's about 26% of the population, very few people, right? Especially if you're buying, if you're one of those that are an investor, you're not buying those properties anyway, for the most part. So you want to know, can I afford the house? The mobile app is going to tell you that exact thing. Can you afford the house? The mobile app is you're going to put in, okay, I am buying a median priced home, $400,000, $500,000, $800,000. And I don't want to think about it too much. I'm just going to say I'm going to put down 3.5% down. Well, the app is going to come back and it's going to tell you, what is your payment going to be for that property? Principal, interest, taxes, insurance. If there's any mortgage insurance, you can put in there what your homeowner's insurance is, if you have any. All of that data is going to go right in there. Now, why do we want that? Why is that so important? Well, it's going to spit out what your monthly payment is. So as we talk about problem solving, we want to know what the monthly payment is. Now, you know what one of the biggest drivers is of your monthly payment? Your FICO score, right? It's one of the biggest drivers. Now, from time to time, we'll do a radio broadcast and we'll tell you what the difference is in your payment from a 750 FICO score to a 650 FICO score. Pretty significant number. So you want to know that up front. Then you want to know, do you qualify? How much do you qualify for? Then you put that into the mobile app and you say, can I afford that payment? Because I might say to you, John, you're qualified for $5,000 a month. And you say, Ron, I'm not comfortable with $5,000 a month. I don't want to spend more than $3,000 a month. Great. You just put that into the mobile app and you understand those things. So the problem solvers is really simple. You're just looking to see, how does it work? Right? And that's the bottom line with our problem solver. So make sure you go out and get the best mobile app on the market. It's ronismylender.com, ronismylender.com. You can grab the app. It's got the calculator. It's got the loan application. You can upload your documents there. You can even grab a pre-approval letter 24 hours a day, 7 days a week. Great, great mobile app. So that's from our friends over at Geneva Financial. They take care of that for you. But I did want to get you this morning, before we get into our content with Jeff Sipes, we're going to give you a little bit of a better outcome segment because we're not going to have time to get to that during the broadcast today. Jeff's got a ton of information that we want to share with you. So the better outcome segment is brought to you by mycdlp.com, mycdlp.com. And let's take a look at what we've got here. Don't overlook the details of dispersing. Let's get it up here on the screen so I can actually see it. Don't overlook the details of dispersing proceeds from the marital home in divorce. You get half, I get half. There's more to address in a divorce settlement agreement than just the disbursement of net proceeds or equity ownership in a divorce situation. A mortgage escrow account is designed to hold a homeowner's periodic payments for real estate taxes, mortgage insurance, and possibly homeowners insurance. Mortgage escrow accounts normally build up large balances at times because of the timing of the payments made from them. Any excess mortgage escrow account balances must be properly accounted for and then refunded after homeowners sell their homes. Mortgage escrow accounts accumulate money over several months, usually from borrowers. Prorated payments for their real estate taxes in most parts of the country, counties require property tax payments on a semi-annual or annual basis, meaning escrow accounts tend to build up until taxes are paid. If the home is sold before tax and insurance payments are made, there will most likely be refunds remaining in the escrow account. Lenders are required to return borrowers' escrow account funds to them once their loan accounts are closed. Dispersing the net proceeds when the marital home is sold or refinanced can be super simple or can be very complex. Either way, the title company or settlement agent will need to make sure all proceeds are dispersed according to the final separation and divorce orders. It's always a good idea to provide the settlement agent with a copy of the final orders, as well as to have your attorney review the disbursement sheet provided by the settlement agent. When selling the marital home, it's important that the settlement agent is given the disbursement orders ahead of time in order to make sure the documents are prepared accordingly. If it's not uncommon for most disbursements to be 50-50. However, there are many occasions where this doesn't happen. For example, if one party continued making the mortgage payments on the home post-separation, that party may be eligible to be reimbursed for those payments. The same goes for repairs and maintenance. In some marital settlement agreements, one party may be compensated for their share of the other party's retirement account or other assets through the disbursement of net proceeds from the sale of the home. If one party is relinquishing their ownership, they should also be released from any liability. Release from financing is a process that can only be achieved by modification, refinance, payoff, or sale. In today's world, breakups do occur with high frequency, and having access to the necessary experience in helping you navigate the process as it relates to the mortgage loan is imperative. One of the commonly misunderstood aspects of refinancing into new mortgage is setting up the new escrow account and the costs involved in doing so. This is literally an aspect of mortgage financing where timing is everything. The amount of funds required to establish a new escrow account is dependent upon the timing of when current and future property taxes and homeowners insurance are due and payable. As you can imagine, this can require a significant amount to be added to the new mortgage or require additional cash to close. Additionally, in divorce situations, many clients are not aware of how future reimbursements of existing escrow accounts are handled when paying off or refinancing an existing jointly held mortgage. Anytime a jointly held mortgage is paid off, whether through a sale or refinance of the marital home, the current lender will send a joint check made payable to both parties on the existing loan for any refunds on overpayment and escrow balances. It is very important that we inform divorcing clients and family friends how overpayments will be handled to avoid any additional future conflict as to which party should receive the funds, because both parties are gonna need to endorse the check. That is just a little bit of better outcomes, brought to you by mycdlp.com, mycdlp.com. And if you want to get your copy, compliments of Ron Siegel Radio, of the Divorce Your Mortgage Workbook, mydymworkbook.com, mydymworkbook.com. You are listening to Ron Siegel Radio, discussing your real estate current events and the financial markets. When we come back, talking about your credit with Jeff Sipes, how to get a mortgage credit score online. How is Credit Karma different from a FICO score? My words, not Jeff's. Credit Karma, FICO score. Does anybody say FICO score, boys and girls? We do talk about it that way. What you can do right now to prepare for home ownership, all that and more. You can reach me anytime. Off air number 800-306-1990, 800-306-1990, or ronsiegelradio.com, facebook.com/Ron Siegel Radio. And if you miss any part of our broadcast, shame on you. But the replay is available. Ron Siegel 1 on YouTube. Ron Siegel, the number 1 on YouTube. Stay tuned. We'll be back in just a few.
Do you know a homeowner experiencing divorce? Do you know a real estate reference and the divorce decree could cost tens of thousands of dollars? A certified divorce mortgage planning and real estate report could save you thousands of dollars, and it's free from your local certified divorce lending professional. Reach out to Ron today. RonIsMyLender.com. Again, RonIsMyLender.com. Licensed under NMLS 217037, Equal Housing Lender.
Are you a renter and tired of making monthly payments, paying off someone else's mortgage? Hey, it's Ron Siegel here to help you stop renting and start owning your dream home with amazing low interest rates. And you could potentially qualify for a $500,000 home for less than $5,000 out of pocket. So stop renting, start owning with Ron Siegel. Learn more at ronsiegelradio.com and start owning today. Licensed under NMLS 217037, Equal Housing Lender.
Are you earning a safe, secure 10+% return on your investments? Is your credit score over 800? Are you living in the home of your dreams or simply where you think you can afford? If the answer to any of these questions is no, what are you doing about it? Text ATP to 79564. Complete a 3-minute complimentary survey, and the area trusted professionals of Ron Siegel Radio will reach out to you to develop a success strategy for you. Again, all you need to do is text ATP to 79564.
Are you a veteran, own a home, and need money? The Siegel Lending Team is here to help veterans refinance and get the money they need. The VA 100 lets you borrow up to 100% of your home's value, refinance your mortgages, consolidate credit cards, and lower your payments by an average of $700 a month. And the Siegel Lending Team knows that character means more than a credit score. Call 800-306-1990. That's 800-306-1990. Rate subject to change without notice. Licensed by the California Department of Corporations, NMLS 21037, and DRE number 018694452.
Are you like many of your neighbors trying to figure out how to pay off your debts so you can retire someday? Build bigger savings. Invest in opportunities. Visit rsrnodebt.com. Debt will destroy 50% of Americans from being able to retire earlier and with more. What if you could have a guaranteed program that could show you how to eliminate all of your debt in 10 years or less, all without having to spend more each month than you spend right now? Yes, that's correct. All without spending more from your checkbook each month than you are today. Get your free analysis today to see if you qualify. Visit rsrnodebt.com. Log on today for your free analysis. rsrnodebt.com. No purchase necessary. The free analysis takes only 2 minutes. rsrnodebt.com. Ron Siegel Radio is your home and mortgage connection. Go to rsrnodebt.com. rsrnodebt.com.
You're listening to Ron Siegel's Home and Finance Show with local and national expert Ron Siegel. Now, here's Ron.
Welcome back to Ron Siegel Radio. Within every market, there are solutions as well as tremendous opportunities. You just need some trusted guidance. That is my message, and I will be delivering it every day on Ron Siegel Radio or anytime at 800-306-1990, 800-306-1990. The Mortgage Minute today being brought to you by our friends over at Geneva Financial when you're ready for that next home loan. Geneva's got the programs and the products. You just need to make the call, 800-306-1990, 800-306-1990. And first-time home buyers. We've been talking about that a lot recently because we know that at age 33, that's when the majority of the people are starting to buy their first home. So here's the issue. A lot of you, some of the biggest question marks we hear all the time is I don't have enough money for a down payment, because you think about it. So Riverside, median home price about $425,000. We were just talking to Jeff Sipes, and we're going to talk to him in depth now. 525,000 or 506,000 up in Placer County, 836,000 in Orange County. How are you going to come up with all that money for a down payment? Well, our friends at Geneva, they've got that solved. There's programs with 3% down. So think about that. On that $400,000 home in Riverside, that's $12,000. 24,000 in Orange County, 15,000 out there in Placer County. 3.5% down FHA loans, down payment assistance, 0.5% if you qualify. Think about that concept, 0.5% down. So about the same as that new iPhone that just came out recently, right? Maybe a little more, a little less, but 0.5%. So you can afford it if you want it. Question is, do you want it? So first responders, there's all kinds of program. Veterans, you're paying nothing down. Again, you're going to have your DD-214 certificate of eligibility, right? So for the most part, we know a veteran recently that paid $1.4 million for a home with no money down, right? The guidelines changed. Guidelines are changing even on the conventional loans. First of the year, $625,000 for Fannie and Freddie loans, right? $625,000. So more than the median price over there in Placer County, more than the median price Riverside, more than the median price San Bernardino, right? $625, Fannie and Freddie. There's programs out there. There's phones out there. Call us at 800-306-1990, or you can just go and get right on my calendar, bookrs15.com. bookrs15.com. That is the Mortgage Minute, brought to you by our friends at Geneva Financial. So I told you earlier, the first step of getting your home loan or buying a home is dealing with your FICO score, not your FICO score. And Jeff Sipes, Blue Water Credit, is the go-to man, him and his team, for Ron Siegel Radio. So good morning, Jeff. Glad to have you with us again.
Yeah, I'm excited to be here, Ron. Yeah, I love the energy, brother.
Yeah, so tell me a little bit. I shared in the first segment that I get my FICO score from myfico.com. They don't even give me a discount. Yeah. Is there a better place to go?
So there's only two ways to get your mortgage credit score, Ron, and that's through your favorite lender or through myfico.com. So everything else that people are seeing out there on the internet could be 10 points off. I've seen it be over 100 points off. So like you said earlier, if it's not FICO, it's FICO.
I like that. I might even use that whole line, because I've referred to it as a FICO score for a long time. So if it's not FICO, it's FICO.
Yeah,
I like that. It'll be in our marketing. Josh, make sure we got a note of that one, please.
Yeah.
So so you're saying 10 to 100 points is the difference between a Credit Karma score or a Credit Sesame score and a true FICO score?
Yep. It's and it's not consistent either, Ron. So if you're looking at your Credit Karma score, which there's like about 60 million of us in the United States that are looking at Credit Karma every day, like you're looking at FICO, they're looking at FICO every day. Unfortunately, they're getting directions on how to improve a credit score that's not even used in the mortgage industry. So the biggest difference between FICO and Vantage, it's called the Vantage credit score, is the scoring formula is different. Paid collections are ignored with Credit Karma. In FICO, unfortunately, your credit score is still going to be injured, if you will, if you have a paid collection or unpaid. So that's where you can see a 100-point difference, because FICO, your score could be 600, and then you go to Credit Karma and you could see a 700 number because you've got some paid collections on your credit.
That's always a fascinating one to me, and I've used this for a long time. I hope it's still accurate. So I've used this trivia question, and our trivia question has been, which is more damaging to your credit score, a collection or a bankruptcy or a parking ticket that went to collection? And they both show up in the same part of the credit score, on the same part of the FICO report, right, Jeff?
Yep. So bankruptcy is definitely a significant impact. Ron, some new news for you. About 3 years ago, the credit bureaus actually got sued by a lot of the attorney generals, and non-contract debt can't report to collections anymore and show up on your credit. So parking ticket is one of those. So library book, parking ticket. So if you didn't sign a contract anywhere, it's illegal to show up on your credit report. So if you have a parking ticket on your credit, get a hold of Blue Water Credit. We'd be happy to arm wrestle those guys for you and try to get that off your credit report.
I like the way you put that there, Jeff, because it's illegal to be on your credit report, but you and I both know that doesn't stop the credit bureaus.
100%. Yeah, unfortunately, about 79% of us have a mistake reporting on our credit. So that's almost 8 out of 10 people, Ron. So that's a lot of us. So like you were saying earlier, is get on myfico.com, talk to your favorite lender. I would recommend at least 3 to 6 months before your lease is up, before you want to start trying to buy a home, and then find out what your numbers are and consult an expert, get some free advice, and start getting that credit score higher so you can save money.
Yeah, that's a great information. The only thing that I'm still waiting, Jeff. I'm waiting because I look at hundreds of credit reports, and I'm not nearly as in tune with the errors as you are. Right. I mean, I look at a lot of them, so I know who I need to tell. Hey, go call Jeff. You need some help, right? But I'm still waiting for that 21% that's completely correct. I'm still waiting for the 1% because I look at hundreds of them, and I haven't found any yet, Jeff. I'm looking. I keep waiting.
Yeah.
I don't know where they are.
Yeah. I mean, if you honestly, Ron, if you looked at every credit report, we would find a mistake. Not to get too credit nerd on you, but there's what's called Metro 2. Metro 2 is the standardized code and standardized reporting that credit bureaus and creditors have to conform with. And if you go through that, if you understand how Metro 2 is written, you can look through a credit report, and I guarantee every credit report has mistakes on it. So fortunately, when you look at things like that, we can do what's called a pre-litigation dispute. It's actually a factual dispute. And if it's not fixed, then there's a potential for the client to be compensated for the mistake on the credit report. So, yep, definitely there is a lot behind the scenes that you need to be aware of with credit reporting.
So you made a comment there, Jeff, that I want to dig into a little bit, because I still hear these people that go out there and they just want to send out these, my word, stupid letters to the bureaus saying, well, that's not mine, and they think that's gonna do something with all those frivolous messages that you put on their pre-litigation dispute. Explain that a little bit.
So a pre-litigation dispute has to be a factual dispute. So it has to be something that's legitimately wrong with a report. So it could be an error, it could be an omission. So we're looking at balances, dates. For example, like if somebody had a repossessed car and say that they had a service warranty lumped into that, then maybe the balance on the credit report is inaccurate on the repossession because of that. So that potentially could be like a pre-litigation dispute. So if you look at a tri-merge, Ron, and all three accounts are on the report and the dates don't match, like say the date of last activity or the date reported dates don't match, that's an FCRA violation as well. So going through a credit report, we're looking for things that are inaccurate, they're incomplete, or even misleading. You can get things removed if they're misleading on the credit report as well.
I know mine's always misleading. For some reason, they like to use my UPS store address as my home address, no matter how many times I correct it. But that's a different story. I want to chat with you when we come back, Jeff, a little bit about bankruptcy and credit reports. I continue to see a lot of reporting post-bankruptcy, and I want to find out from you what should be and what should not be on that report. We're going to continue our conversation with Jeff Sipes when we come back. We're going to also talk about a real-time real estate story, what you can do right now to prepare for home ownership, all that and more. You can reach me anytime. Off-air number 800-306-1990. 800-306-1990 or RonSiegelRadio.com. Facebook.com/Ron Siegel Radio. And if you miss any part of our broadcast, shame on you. But the replay is available. Ron Siegel 1 on YouTube. Ron Siegel, the numeral 1 on YouTube. Stay tuned. We'll be back in just a few.
Do you know a homeowner experiencing divorce? Do you know a real estate reference and the divorce decree could cost tens of thousands of dollars? A certified divorce mortgage planning and real estate report could save you thousands of dollars, and it's free from your local certified divorce lending professional. Reach out to Ron today. RonIsMyLender.com. Again, RonIsMyLender.com. Licensed under NMLS 217037, Equal Housing Lender.
Are you a renter and tired of making monthly payments, paying off someone else's mortgage? Hey, it's Ron Siegel here to help you stop renting and start owning your dream home with amazing low interest rates. And you could potentially qualify for a $500,000 home for less than $5,000 out of pocket. So stop renting. Start owning with Ron Siegel. Learn more at RonSiegelRadio.com and start owning today. Licensed under NMLS 217037, Equal Housing Lender.
Are you earning a safe, secure 10+% return on your investments? Is your credit score over 800? Are you living in the home of your dreams or simply where you think you can afford? If the answer to any of these questions is no, what are you doing about it? Text ATP to 79564. Complete a 3-minute complimentary survey, and the area trusted professionals of Ron Siegel Radio will reach out to you to develop a success strategy for you. Again, all you need to do is text ATP to 79564.
Are you a veteran, own a home, and need money? The Siegel Lending Team is here to help veterans refinance and get the money they need. The VA 100 lets you borrow up to 100% of your home's value, refinance your mortgages, consolidate credit cards, and lower your payments by an average of $700 a month. And the Siegel Lending Team knows that character means more than a credit score. Call 800-306-1990. That's 800-306-1990. Rate subject to change without notice. Licensed by the California Department of Corporations, NMLS 21037, and DRE number 018694452.
Are you like many of your neighbors trying to figure out how to pay off your debts so you can retire someday? Build bigger savings. Invest in opportunities. Visit rsrnodebt.com. Debt will destroy 50% of Americans from being able to retire earlier and with more. What if you could have a guaranteed program that could show you how to eliminate all of your debt in 10 years or less, all without having to spend more each month than you spend right now? Yes, that's correct. All without spending more from your checkbook each month than you are today. Get your free analysis today to see if you qualify. Visit rsrnodebt.com. Log on today for your free analysis. rsrnodebt.com. No purchase necessary. The free analysis takes only 2 minutes. rsrnodebt.com. Ron Siegel Radio is your home and mortgage connection. Go to rsrnodebt.com. rsrnodebt.com.
You're listening to Ron Siegel's Home and Finance Show with local and national expert Ron Siegel. Now, here's Ron.
Welcome back to Ron Siegel Radio. Within every market, there are solutions as well as tremendous opportunities. You just need some trusted guidance. That is my message, and I will be delivering it every day on Ron Siegel Radio or anytime at 800-306-1990, 800-306-1990. The real-time real estate segment today being brought to you by the area trusted real estate professionals of Ron Siegel Radio. Text SLT Home Digest to 79564. Find your dream home before someone else does. Let's see what do we have here. The main key to understand. Do we have this one, Josh? Rising interest rates. Is that what we're doing today? Okay, you've got to have somebody keeping the host on track here. The main key to understanding the rise in mortgage rates. Every Thursday, Freddie Mac releases the results of their primary mortgage market survey, which reveals the most recent movement in the 30-year fixed mortgage rate. Last week, the rate was announced as 3.01%, which is the first time in 3 months that the mortgage rate surpassed 3%. In a press release accompanying the survey, Sam Cotter, chief economist at Freddie Mac, explains mortgage rates rose across all loan types this week as the 10-year Treasury yield reached its highest point since June. The reason Cotter mentions the 10-year U.S. Treasury yield is because there has been a very strong relationship between the yield and the yield in the 10-year and the 30-year mortgage rate over the last 5 decades. And we've got the chart showing on our socials if you haven't seen it. For almost 50 years, the 30-year mortgage rate has moved in unison with the 10-year Treasury. The relationship has also been consistent throughout 2021, and we've got a graph for that one as well. The graph reveals the most recent jump in mortgage rates was preceded by a jump in the 10-year Treasury rate, called out by, if you're looking at, again, the red circles on our charts, if you're watching us on RonSiegelRadio.tv. So what impacts the yield and the rate? According to Investopedia, quote, there are a number of economic factors that impact Treasury yields, such as interest rates, inflation, and economic growth and inflation. Did I say inflation? Unquote. Since there are currently concerns about inflation, and economic growth due to the pandemic, the Treasury yield spiked last week, despite impact mortgage rates. What does this mean for you? Cotter in the Freddie Mac release mentioned above or earlier, quote, we expect mortgage rates to continue to rise modestly, which will likely have an impact on home prices, causing them to moderate slowly after increasing over the last year, unquote. Nadia Evangelos, senior economist and director of forecasting for the National Association of Realtors, also addresses the issue, quote, consumers should not panic. Keep in mind that even though rates will increase in the following months, these rates will still be historically low. The National Association of Realtors forecasts a 30-year fixed rate to reach 3.5% by mid-2022. Bottom line, forecasting mortgage rates is very difficult, as Mark Fleming, chief economist at First American, once quipped, quote, you know the fallacy of economic forecasting is don't ever try and forecast interest rates and or more specifically, if you're a real estate economist, mortgage rates, because you always invariably be wrong, always will invariably be wrong. That being said, if you're either a first-time home buyer or a current homeowner thinking of moving into a home that better fits your current needs, keep abreast of what's happening with mortgage rates. It may very well impact your decision. That is the Real-Time Real Estate segment, again, brought to you by the area trusted real estate professionals of Ron Siegel Radio. Text SLT Home Digest to 79564. Find your dream home before someone else does. Continuing our conversation this morning, Jeff Sipes, Blue Water Credit, is with us. So, Jeff, I just saw this one again. Family, 3 years ago, they had a bankruptcy and looked at their report. They're still showing late payments on the report. They're still showing balances due. They're still showing payment amounts. Is that allowed? Can we do that?
Great question, Ron. It's really going to depend on the chapter of bankruptcy they file. So most people are going to file a Chapter 7 bankruptcy.
That's what this one was, is a 7.
Yep, so Chapter 7 bankruptcy, the bankruptcy itself is supposed to fall off 10 years after the file date. And then every account included in the bankruptcy becomes a delinquency, which then is supposed to fall off after 7 years. And then once the account's included inside of a bankruptcy, Ron, there's not supposed to be any new late payments. There's not supposed to be a balance owed. So those are all violations if the account was included in bankruptcy. Now, the bankruptcy itself, though, could be dismissed or discharged. Dismissed means that they filed and they didn't complete the filing or the judge denied the bankruptcy. So if that's the case, then the creditors still have the right to report the balances and to report new late payments. But if the Chapter 7 was discharged, discharged means it was completed, the debt is gone, there should be no new reporting of late payments, there should be no balances owed.
So that would mean that if I'm looking at that report, if you're looking at your report, if you went to myfico.com and got a real report, and it has a DLA, date last activity, and that's after the bankruptcy, would that be correct or incorrect reporting?
Yeah, incorrect. There's not supposed to be any activity post-bankruptcy. Creditors legally are not supposed to make any updates or changes. And so one thing we see a lot, or we get calls a lot about, is someone includes a house in the bankruptcy, then they keep the house, they continue to make payments on it, but then the payments don't show up on the credit report. So once you file bankruptcy, if you include your house in the bankruptcy, I have never seen a creditor report payments post-bankruptcy just because there's a potential violation if they do. So
that'll end up posing a different issue if you're going to buy a new piece of property and the lender pulls the credit report and they haven't been posting that mortgage history. You just have to address that mortgage history separately. But that's some great information. And now, will those post-bankruptcy date, if it's still showing activity, is that going to hurt or help our credit score or be null on our credit score if they're reporting it inaccurately?
Yeah, so unfortunately, when an account goes in bankruptcy, it becomes a delinquency. Each month that the delinquency ages, it impacts the score less. So Ron, if they're making new activity or new delinquent remarks or new dates on the account, it would likely hurt the score. So that's something I would definitely recommend. Go to our website, bluewatercredit.com, fill out a form for a free consultation. We'll review everything with the clients if they have issues with bankruptcies. And then that's something we can definitely fight on behalf.
So if you've had some challenges, right, there's a likelihood is that, number one, you need to get to myfico.com, find out if there's issues showing up, and then get in touch with Jeff and his team at Blue Water Credit so they can actually take a look at the report. And again, what's the cost of that initial consultation, Jeff?
It's risk-free, Ron. No charge. If it's just risk-free, we want to point them in the right direction, and that's we try to always use the golden rule: do what's best for the client. So if that means just pay down your credit cards, open up a new account, be added as an authorized user, we're going to give you all that advice for free. You're not a good fit for credit repair. If we don't feel like someone would benefit, we're not going to try to make them hire us. We just want them to get the best results, get back with you, get pre-approved, and get their dream home.
That's awesome, and that's why I love having Jeff come on, is because we share that value, right? There's Jeff is not I don't know his finances, but he's not starving, right? So the idea here is we're here to educate you, to get you the best information possible. Plenty of people need help. There's plenty of people we can give information that don't need the help, and you're going to get either way. You're going to get the right information. So what is changing to the credit reporting for 2021? Is there anything new this year?
Yeah, there's a few big changes, Ron. So you mentioned getting a credit report earlier from myfico.com, and I want the listeners to know that myfico.com is going to give you accurate credit score and a credit report. If somebody just wants a credit report, they can go to annualcreditreport.com. It's absolutely free, no strings attached. But don't get the credit score there because it is FICO, not FICO. It is inaccurate. Annualcreditreport.com. Now, prior to the pandemic, you could only have access to that credit report once per year. Now, because of the CARES Act, you actually have access to get that report now once a week for free, no strings attached. So annualcreditreport.com, you can get your TransUnion, Experian, Equifax credit reports for free once a week, and you can get make sure everything on your credit report is accurate. Make sure you don't have any new accounts that you're unaware of or any collections that you're unaware of.
Yeah, that's great information as well, because you want to be watching, especially in this time. People are at home and they've got too much time on their hands, and you got the crooks out there that are dealing with the identity theft, and that's one of those things that obviously drives us nuts. But we don't like that. Fastest way to increase your credit score, Jeff? Give me a quickie, and then we'll go to break and talk some more.
All right. So one maxed out credit card, Ron, one maxed out card can drop a score by 40 points.
Wow.
So if you have a $300 Capital One credit card and you go to Costco, you just max the card out because you're spending $300 there. That would drop your score by 40 points. So to have the best credit score, Ron, you want a balance of about 1 to 10% of your available limit. So on a $300 available limit, you'd want to use between $3 and $30 on that card, about 30 to 45 days before you apply for your home loan.
And we'll talk about when I come back, and I want to chat with Jeff a little bit about paying your credit cards the right way, according to Ron Siegel Radio. We'll talk about that. You can reach me anytime. Our off-air number, 800-306-1990, 800-306-1990, or ronsiegelradio.com. Facebook.com/Ron Siegel Radio. And if you miss any part of our broadcast, Ron Siegel 1 on YouTube. Ron Siegel, the number 1 on YouTube. Stay tuned. We'll be back in just a few.
Do you know a homeowner experiencing divorce? Do you know a real estate reference and the divorce decree could cost tens of thousands of dollars? A certified divorce mortgage planning and real estate report could save you thousands of dollars, and it's free from your local certified divorce lending professional. Reach out to Ron today. RonIsMyLender.com. Again, RonIsMyLender.com. Licensed under NMLS 217037, Equal Housing Lender. Are you tired of paying rent? Are you tired of paying someone else's mortgage? Do you know qualified folks can potentially purchase a $500,000 home for less than $5,000 out of pocket? Ron Siegel can help qualified people purchase their own home at amazing interest rates. If you're tired of paying someone else's mortgage, reach out to Ron today at RonIsMyLender.com. That's RonIsMyLender.com. Licensed under NMLS 217037, Equal Housing Lender.
Hey friends, do you dream of mortgage-free home ownership? Are you aware that even if you own your home free and clear, it could still be costing you thousands per year? The Siegel Lending Team can help you generate tax-free income, accumulate family wealth, and maintain ownership of your home. By simply emailing your most recent mortgage statement, you'll receive a no-obligation real estate plan. Learn more by calling 1-800-306-1990 or email me your recent mortgage statement to PEAR@RonSiegelRadio.com. Licensed under NMLS 217037, Equal Housing Lender. Are you a renter and tired of making monthly payments? Paying off someone else's mortgage? Hey, it's Ron Siegel here to help you stop renting and start owning your dream home with amazing low interest rates. And you could potentially qualify for a $500,000 home for less than $5,000 out of pocket. So stop renting. Start owning with Ron Siegel. Learn more at ronsiegelradio.com and start owning today. Licensed under NMLS 217037, Equal Housing Lender.
Are you like many of your neighbors trying to figure out how to pay off your debts so you can retire someday? Build bigger savings. Invest in opportunities. Visit rsrnodebt.com. Debt will destroy 50% of Americans from being able to retire earlier and with more. What if you could have a guaranteed program that could show you how to eliminate all of your debt in 10 years or less, all without having to spend more each month than you spend right now? Yes, that's correct. All without spending more from your checkbook each month than you are today. Get your free analysis today to see if you qualify. Visit rsrnodebt.com. Log on today for your free analysis, rsrnodebt.com. No purchase necessary. The free analysis takes only 2 minutes. rsrnodebt.com. Ron Siegel Radio is your home and mortgage connection. Go to rsrnodebt.com. rsrnodebt.com.
You're listening to Ron Siegel's Home and Finance Show with local and national expert Ron Siegel. Now, here's Ron.
Welcome back to Ron Siegel Radio. Within every market, there are solutions as well as tremendous opportunities. You just need some trusted guidance. That is my message, and I will be delivering it every day on Ron Siegel Radio or anytime at 800-306-1990, 800-306-1990. Well, the Your Credit Matters segment is the rest of the show. Right? So Jeff Sipes is with us. Why do I need to talk about credit when I've got the guru right here with us? But I will give you, before we get to Jeff again, It's time for giveaways from Ron Siegel Radio. So we've got all kinds of them. So we've got a 7 steps to a 700 credit score. You'll probably guess at how to get it, right? All you have to do is text RSR credit book to 79564. RSR credit book 79564. You'll get that credit book. Or you can get the ID theft book. And this is a quiz. How do you think you're going to get that one? Yes, you're going to text RSR ID theft book to 79564. RSR ID theft book to 79564. You get that one free as well. All gifts from your friends right here at Ron Siegel Radio. We're continuing our conversation. Jeff Sipes, Blue Water Credit, is with us. He is the credit guru for Ron Siegel Radio. He's our go-to guy when I have questions. Now, I've been looking at credit reports the better part of 20 years now, maybe a little more than 20 years. And it's an integral part. And, things change, like Jeff was talking about in the last segment. And if you missed it, you missed a lot. Right, but Jeff was talking about the changes for 2021. We've talked about bankruptcy changes and errors on credit reports. So I learned when I need to know information, I'm calling Jeff. Right? So the idea here is go on bluewatercredit.com. Get on their site. There's a box on there. I'm not on the site right now, but I will be in a minute. But go right on there. Take a look. Get a consultation with Jeff and the team. And, get your credit scores enhanced. Now, one of the ways I chat with you all the time about enhancing your credit score, and Jeff touched on it a bit in the last segment. So you want your utilization rate to be between 1% and 10%. That was the idea that Jeff just shared. And one of the biggest errors I see from people is they say, Ron, I pay my credit card in full every month right after I get the statement. And I think that's probably going to be an error. Right? The idea is you want to pay it before you get the statement. Go online, figure it out, pay the balance as much as you can. Now, Jeff, you said between 1 and 10. What if I'm below 1?
So, Ron, 0 doesn't score as high as a small balance. So you can have $1 on your credit card, and that will improve your score over a 0 balance. And I wanted to talk to your point just a second ago. Most credit card companies, they're going to send the information to the credit bureau when your statement ends. And then, so if you want to know when that they send that information, if you go to annualcreditreport.com, it will tell you the date that they report on that credit report. And so that's typically when your statement closes, and then your payment due date's usually 2 or 3 weeks later. So you can pull out your credit card statement or look online, find out when your statement ends, and then you want to just have a small balance on your credit card when its statement ends. So then when it shows on your credit report and you pull credit to pre-qualify them, their score is up in the 800s.
Beautiful thought right there. And so in order to do exactly what Jeff just said, what I recommend is if you've got a credit card that you're using all the time, and I recommend you keep using them all the time, right? Set your cell phone bill, get automatically paid by one, and maybe your cable DirecTV bill by another one, and maybe an electric or gas bill paid by another one, whatever. Set your recurring bills, and then pay them right away so they stay active all the time. But here's the key is I want you to set it up for a small payment. And I don't care if you're doing like Jeff just said, you leave $1 balance on there, but set like a $25 payment to go in or $35 payment to go in so it arrives there the day before or 2 days before your payment due date. Don't ever want to have a late payment, but you're going to go in before the statement closing date to make that majority of your payment as much as you can to get that balance. You're making 2 payments every single month. So that's just Ron Siegel Radio advice to help you get that score high. Jeff, can we get our rental history? Is that going to show up on our credit report?
Yeah, and to your point, your credit score only matters when it matters, right? So if you are planning on shopping for a house, then this is the stuff you need to adhere to. You need to make sure you know your credit card limit. You need to really make sure your balance does not exceed 10% of your limit when you're shopping for your house or if you are trying to refinance. So, but if you're just going through normal life, I monitor my credit just like you do, Ron, and your score will float up and down. So say you buy a couch or put something on your credit card that's outside of your normal purchases and your utilization goes up. I mean, your score could drop, 20 or 30 points. And then realize when you pay that off the following month, your score is going to bounce right back. So fortunately, FICO has a short memory. It only does a 30-day look back, basically a 30-day look back on your credit card utilization. So so if you're not looking for a house in the next month or two, it's not a huge deal. But if you are shopping for a house, pay attention to those balances.
So let me ask you a question before we get into the rental issue. So if it only has a 30-day look back, I've noticed on mine, if I go and I make a big purchase and I didn't pay it off before the statement closing date, and say maybe I get to 75 or 80% utilization, and my score might drop, 30, 40 points. And then I pay it off the next month, and now I'm back in using that. I don't know. I usually leave like pennies on there, right? So if I've got a $417.64, I'll pay $417, right? But I don't get a full 17 back. It'll take me a few months for that to come, those full points back. Is that normal?
So the credit card company reports once a month, Ron. So if you're looking at your FICO scores live, if you have a monitoring, you should get those points back 30 days, exactly 30 days from the date that it dipped. So so if you're looking at live scores, as soon as your credit card reports, your score should change.
Okay, that's what we're looking at as always. One of the other ones that I see a lot on here, Jeff, is people ask me all the time, especially when they call me and they haven't gone through the process that we're sharing today. Well, what if I pay off that collection? Is my score going to go right back up again?
Oh, man. Yeah, so paying a collection does not help your score. So that's one of the biggest myths that we have to kind of debunk, is a paid collection hurts your FICO score just as much as an unpaid collection. So fortunately, we do have a debt negotiator on staff. She's got connections at nearly every collection agency. And then we're going to know the collection agencies that will agree to delete the account for payment. So we can settle the account usually for 50 cents on the dollar. And a lot of our connections, we can actually get them to agree to remove it from your credit history. So then when someone goes to apply for that loan, their score could be 40, 50, 60 points higher because the collection was deleted, not because it was paid.
Beautiful. So tell us how does the program at Blue Water work? Give us about a half a minute there.
Yeah, so go to bluewatercredit.com, or you can call our office at 916-315-9190. We always offer risk-free consultation. The appointment's over the phone. We can work with anyone throughout the state. We'll give you guys a specific game plan on what you can do to improve your credit. And then if you're a good candidate for our services, we'll kind of outline you how long we think it'll take, what kind of results you'll see, and then obviously the cost benefit. You said it earlier in the show, Ron, we always want to look at your return on your investment. If you spend a few $100s or $1,000 with us, and you can save, $3,000 a year on your house payment, and that's over the course of, 30 years, it's going to be a no-brainer. I would love an investment where I got 800% return or 1,000% return on it.
Absolutely. And there's some special programs that we have at Ron Siegel Radio where we might even help subsidize the cost. We'll talk about that as well, being at a different day or personally. But today, as always, I ask, set that first radio preset button to come back here and join us every Sunday morning, where we only speak about items affecting your house and your bank account. Thanks to Josh, who's engineering us today. And, of course, a special thanks to you for spending a little bit of your day with us. That's all for Ron Siegel Radio. Again, if you have any questions or to meet any of our guests, call me anytime, 800-306-1990, 800-306-1990, or ronsiegelradio.com. And remember, make a lot of money so you can help a lot of people and have a lot of fun. Have a great day. We'll talk to you next time on Ron Siegel Radio.
I'd like to call him something. I think I'll just call it a day.